US dollar bills, grocery store prices dropping, smiling shoppers at checkout. Some long-awaited relief in finally hitting American wallets. The latest Consumer Price Index report released for June 2025 shows that inflation has cooled more sharply than expected, raising hopes that the Federal Reserve could soon cut interest rates for the first time in years, and the ripple effects could be big, from mortgage rates to credit cards to the 2025 presidential race. Animated CPI charts showing a drop in annual inflation. According to the Bureau of Labor Statistics, consumer price raise rose just 2.3% year over year in June, the lowest level seen early 2021 and below the Fed's 2.5% forecast. Even more encouraging, core inflation, which strips out volatile food and energy prices, dropped to 2.6%, another major milestone in the Fed's long fight to tame rising costs. Key categories that saw price drops include house rents, used cars and trucks, airfare, household energy cost. Meanwhile, grocery prices stays flat and gas prices is slightly lower. Exterior of Federal Reserve Building, Chair Jerome Powell at present press conference. Federal Reserve Chair Jerome Powell responded causally, saying, "We are encouraged by the trend, but we need to see more sustained progress before declaring victory." But Wall Street is already celebrating. Market jumped onto the news, but with the Dow Jones, S&P 500 and Nasdaq all closing higher, investors now overwhelmingly expect the Fed to begin cutting rates as early as September, a move that could ease borrowing costs across the board. Home buyers, car dealerships, small business dealers. So, what does a potential rate cut mean for everyday Americans? If the Fed pulls the trigger, mortgage rates could dip below 6% after topping 8% just a year ago. Credit cards APRs, now averaging nearly 21%, could finally start to fall. Auto loans, personal loans, and small business lending could all get cheaper, fueling more spending and investment. That's especially crucial for younger Americans, many of whom have been priced out of home ownership or crushed by debt since the post-pandemic inflation surge. Biden speaking at podium campaign event clip. Politically, this is a big win for the Biden administration, which has been harmed for over a year on the economy. President Joe Biden touted the report, saying, "We are delivering result. Prices are stabilizing, wages are rising, and we are getting the economy back on track." But the economic story is not entirely rosy. Food bank lines, high housing costs in cities. Many Americans are still feeling squeezed. Rent remains historically high in major cities. Childcare and healthcare costs continue to climb. And while inflation has cooled, prices have not gone back down. They have just stopped rising as fast. That distinction matters. A gallon of milk that jumped to $5 during the 2022 start is still $5, is just not $5.25 now. And while wages have been growing, that have only recently started to outpace inflation, allowing households to regain some purchase power. Analysts on cable news discussing Fed's strategy. So what's next? Most analysts believe that the Fed will hold steady at this July meeting, then seriously consider a rate cut in September, provide inflation stayed in check, and the job market remains strongly. Some are even speculating we could see two cuts before the end of 2025, especially if the economy shows. But Powell has made one thing is clear: We are not out autopilot. We'll move carefully based on the data. Everyday Americans shopping, gas stations, Wall Street tickers. After more than 2 years of economic turbulence, the US may finally be turning a corner. Inflation is cooling, optimism is rising, and for the first time in a while, Americans are beginning to feel it. But with a high stakes election on the horizon and global risk still looming, the path ahead is far from certain. Follow for the latest on the economy, the Fed, and the 2025 tier.